Hello again, federal employees. Brad Bob here to talk about a really important subject, and that is FEGLI, Federal Employee Group Life Insurance, how this applies to you, what your options are, what you can do to save some money over your working career. So with that, let's get started and let's go straight to OPM's website. So I'm here on OPM's website right now, and here's your options. All the options right up top. Basic life insurance. Basic life insurance is your salary rounded up to the next 1,000 plus 2,000. So for example, salary of $96,300, round up to 97, add 2,000, $99,000 is your coverage for basic. Option A is a flat $10,000. Option B, that is multiples of your salary coverage on you. And then option C, that's family independent coverage. So if we want to look at option C, that is one multiple is $5,000 of coverage on your spouse and $2,500 of coverage on an eligible child. You can get up to 5 multiples for those. So $25,000 for a spouse, $12,500 for a kid. But the two big ones I want to discuss here today are basic and option B. Okay, option B here, we can see here in option B, the rates get to be really high. Okay, if we just look right here, and you can keep going down. You can keep it as long as you want, as long as you can afford to pay premiums. But you can see monthly premiums are 8 cents, 8 or 9 cents per thousand at age 40. But then by the time you get to age 50, you're at 43 cents. Now you're at 95 cents. And let's look at what those look like here. So those rates, if we look here a little closer and look at an example, if someone has a salary of $100,000, they're going to have coverage of multiples of 100, okay? And you can get 5 multiples of that. And the rate at age 50 is 11 cents. So you take the 100 times 5 times 11 cents, gives you $55 premium per pay period, but right at $119 per month. And then if you go to age 55, it jumps quite a bit up to $216 right here. Go one more, go up to age 60. You go from age 59 to 60, and now you're up to $476. It more than doubles when you turn 60. And then at age 65, it goes up to $585, and it continues increasing. All right. So what I found is that nobody continues to pay premiums here. Now, there may be an outlier where it's worthwhile to continue to pay premiums, but I can't say that I've ever seen a scenario where somebody's continued to pay premiums past the age of 69. So, what does this mean to you? And first of all, the rate for basic, cover that first. Your basic insurance here is, if your basic coverage is $100,000, it's just a rate of 0.325 per month. So you're paying $32.50 per month on $100,000 of coverage. Okay, now again, back to what this means to you. And the biggest takeaway here that I want you to understand is, if you are in good health, you want to look at getting your own coverage. Look at getting something like a term policy. You can get a term policy that lasts 10 years, 15, 20, 30 years. And that's the type of coverage that most people get that is a good fit for most people. And if you're age 40, if you're early in your working career, look at doing it yesterday. Okay, this can save you all kinds of money. There's a good chance you can get a rate that's better than what you're paying right now, and then you can lock that in for a 20-year time period, or maybe a 30-year time period. Depends on what you need. But even if you have a year left of working, say that you're 61, you're going to work another year, and you have option B, 2 times your salary. There's no reason to pay for that for the next 2 years if you can get your own policy. If it saves you $100 a month, that's $1,200 you save. So let's talk about how FEGLI works briefly. FEGLI is a group rate. So they have to cover everybody, and when you start work, you sign up for FEGLI with no underwriting questions whatsoever. And then they have an open season about once every decade. We had one here a few years ago, and prior to that it had been 11 years since they had one. Anybody can sign up for it, for FEGLI at any time, but if it's not an open season, then you have to answer health questions. So I'm not sure why someone would answer the health questions and go through underwriting to get FEGLI, because if you're in good health, you could probably get your own policy. So FEGLI is group coverage. Okay, group coverage, everybody has the same rate. You have people who are in terrible health, you have people who are in really good health. So you get an average rate between the two. Also, for your basic insurance, a 30-year-old pays the same rate for basic as a 75-year-old does. Okay, so that should tell you a little something about that if you're 30 years old and paying for basic. Now, as far as dropping coverage, if you go to somebody and you're looking at getting your own insurance, make sure you get the policy in place before dropping your FEGLI. Okay, you don't ever want your family or dependents to go without that coverage if it's something that they need. Okay, if they're depending on your income, so make sure you get yours in place. Then look at dropping your FEGLI and use form, pretty sure it's form SF 2817. Okay, you can find that form, print it out, and get it sent in. Now, as far as dropping coverage, do you want to drop, if you get coverage in place, you don't have to drop everything. You can just drop parts of it. All right, so you may want to drop just your option B. Maybe you want to drop everything. But keep in mind, basic and option A operate differently than options B and C. Okay? So basic and option A, the way that they work is you pay for them until retirement or age 65, whichever one is later. So if you work until age 68, then you have to pay for it until age 68. Okay? But once you retire, you stop paying premiums. And then your coverage reduces by $2,000 a month until you finally reach 25% of the final value. So in our example of $100,000 of coverage, that basic is going to be reduced down to $25,000. So what does that mean to you? If you're 30 and you're in good health, you can get your own life insurance. It may be better off for you to drop your basic as well and get your own life insurance coverage. What about if you're 50? If you're 50, I don't know, you may want to see. However, the break point that I've found is somewhere between 55 to 58. Do a cost-benefit analysis. Okay, see what it's going to cost you with what you're going to get. Okay, and again, what you're going to get is that $100,000 of coverage until 65 or retirement, whichever's later, and then it's going to get reduced down to 25%. So if you're in your 50s, you definitely want to consider whether or not to keep your basic before dropping everything. And the closer you are to age 65, obviously the better benefit it is to keep in basic and option A. And you may want to keep those because you've already paid for it. If you're going to retire in a year or two, you've got another year or two of paying for it, and then you're done. Okay? Then it drops after that. So, do a quick summary. Basic, your salary, rounded up to the next 1,000, plus 2,000. Option a flat 10,000. Those two, again, work the same. Pay for them till age 65 or retirement, whichever's later. Stop paying premiums. They get reduced down to 25% of the final value. Then you have option B, which is your salary. you can get up to 5 multiples of your salary, and those premiums go up every 5 years. Then you have option C, which are multiples on spouse and dependents, and those premiums go up every 5 years also. So, in summary, if you're in good health, really look at getting your own life insurance policy. You can save thousands of dollars over your working career. Even if you're really close to retirement and you have those coverages and you're in good health, you could still save thousands of dollars. If you're not in very good health, you can't get your own policy, it may be worth it for you to keep option B. Option B, group insurance, it's a great thing to have access to. It doesn't mean it's a great thing for everybody, but yet it's something that's good to have access to. And if you can't get your own life insurance policy, you need coverage, then you want to keep what you have through the government. Maybe you want to look at increasing it next open season. But again, great thing to have it's great to have the option, okay, of having the coverage through work. But if you are in good health, look at getting your own policy today, which will probably save you quite a bit of money in the future. Thanks for staying with me here through this talk about FEGLI. I have more coming soon. Don't forget to like and subscribe if you want to see more of these videos. Thanks.